California for his 5 minutes.
Thank you, Ms. Sanchez. Chairman Bernanke, you've made it quite clear that so-called QE3 is the decision that hasn't been made and won't be made for at least 11 days or whatever you said. What I'd like to ask is, from my perspective, a QE3 would affect interest rates potentially and potentially liquidity, neither of which, it seems to me, are obstacles to growth at the moment, interest rates being historically low and there appears to be plenty of liquidity. So my question is, why, in considering a QE3, if the decision were made to do it, I understand you haven't made that, but in what way do we believe, or does someone believe it would help the current economic situation?
So again, putting aside the question of whether we need further steps, putting aside the question of the adverse side effects, that are risks and costs that might be associated with given policies, our analysis is that the quantitative easing programs we did in the past did ease financial conditions. They lowered interest rates. They lowered the spreads between private rates and government rates. So in other words, even given a level of Treasury security interest rates, it could lower the rate paid by corporations. We've lowered mortgage lates. It's raised stock prices and increased, therefore, wealth effects for consumers. So in general, we continue to believe that while some may think that the effects are less powerful than they were, for example, in 2009, we continue to believe that potentially that these sorts of measures could still add some additional accommodation, some additional support to the economy. But then again, you know, as you point out, there may be some diminishing returns, and that would be a consideration we'd have to look at as we try to analyze what our options are.
Okay, let me move over to Europe if I can. In your testimony, you said that we should monitor the situation and that the Federal Reserve remains prepared to take action. You outline what some of that action should be. What should we as policymakers be monitoring, and what action might we be prepared to consider or to take? Obviously, in Europe, we can't control their fiscal policy, their monetary policy, nor their political decisions. Mm-hmm. If there were to be a deterioration, a rapid deterioration of some situation in Europe, be it the currency or the banks or whatever, how can we put up a firewall, or can we, or what things might we be prepared to do? You've mentioned you're doing what you can to minimize the impact on the U.S. economy.
Well, the Congress and the administration have not, you know, agreed to any kinds of direct support to Europe. The administration has not, for example, asked for additional IMF funds, for example. So I think the main things that Congress could do would be to help strengthen our own economy. The more momentum, the stronger our economy, the better able we would be to withstand the financial spillover from problems in Europe. And so that goes back to my earlier points about getting our fiscal situation clarified, taking appropriate steps to help troubled parts of our economy, from the employment market to the housing market to whatever else you would be looking at. But again, I think my bottom line here is that there's not a whole lot that can be done that I can think of to attenuate the problems in Europe. We obviously have to monitor very carefully. I think the best thing we can do is try to make sure that we're strong and prepared here in the United States.
Are the risks to our economy in Europe, are they greater today than they were 6 months ago?
Well, the risks have waxed and waned. You know, this problem has been going on now for more than 2 years. This crisis has been going on for more than 2 years, and there have been periods of greater intensity and less intensity. Earlier this year, particularly following the long-term refinancing operations conducted by the European Central Bank, as well as the the debt restructuring of Greece, the situation calmed down fairly notably for a while. But for a number of reasons, including the Greek election, which raised questions about whether Greece would in fact meet the requirements of its program, and concerns about Spain and Italy, the Spanish banking system, and so on, the stresses have risen pretty significantly in the recent month or two. So I'm not quite sure whether it's the highest point it's been, but it certainly is at a point where it's important for European leaders to take additional effective steps to contain the problem.
Thank you, Mr. Chairman.
I'll recognize Representative Cummings from Maryland now for 5 minutes.
Thank you very much.